Hi, everybody. Welcome to Friday's weekly wrap up here at verifiedinvesting.com. My name is Gareth Soloway, Chief Market Strategist. So, we're going to get into the nitty gritty of the charts, looking at the key pattern setups and key major levels. Before we do that, this week, let's wrap it up. This week was a quiet week for the markets, mostly sideways. Semiconductors continued to lead with Nvidia hitting and going above a $4 trillion valuation. However, again, as I've said in the last few days, these semis are finally into major levels of resistance. We'll take a look at the charts in just a second. Now, we've been watching the S&P. The S&P, again, is still under major resistance. So be aware when I go over the next segment where we look at the S&P, I'm going to show you the level that if we break, that's where the floodgates open. And of course, we'll talk about Bitcoin and crypto, which has gone nuts over the last few days. Okay, so the first and foremost thing before we get into the charts is next week, earnings season begins and the CPI and PPI come out. That's inflation plus earnings. Guess what? That's going to be volatility. There's going to be volatility next week. Be ready for it. It means action and trading opportunities. Taking a look at the S&P 500 here, this is your intraday chart. So we opened lower on those tariffs that were threatened against Canada that would go into effect on August 1st at 35%. There were also comments from Jamie Dimon that were a little uneasy for the markets to digest as well. But as you can see, the markets opened and kind of floated sideways to up. Look at how quiet it was. And again, very just little ups and downs throughout the course of the day, a gentle float up on very light volume. But this daily chart is what we want to pay attention to. So here we have our daily chart, major trend line here, right? Major trend line here and here. And you can see we went right into this kind of triple cross on the trend lines. It rejected it. Then we came down for a couple days, floated back up, and are back down slightly today underneath these three trend lines. Now, I said I would show you the level that if the S&P breaks, we'll also look at the Nasdaq 100. But if these levels break, and I'm going to draw the trend line now, it's game on to the downside. As long as this level holds, then the markets can continue to float, albeit probably in a tight range considering the resistance above. But here it is, guys. Connect the low from April 7th to the low here and drag that trend line up. That line is your uptrend from April 7th. That's your uptrend. You break below that, you have broken your uptrend, and you would expect the floodgates of sellers, mainly institutional initially, because retail, very unlikely that many people know about this, but that is your break point. So listen, we could hover in here for another few days. We could even test, maybe even pierce a couple of these upper lines, but at some point, this market has to make the decision. It's either going to break out to the upside or it's going to break and really start to come in significantly. Now, if we go to the QQQ, same thing. Nasdaq 100, right? Here's your Nasdaq 100 daily chart. Take that low from April 7th, put it right through that same low, and look at today. Isn't this amazing, guys? The low today, when we were at the lows, we were briefly below this level, but it has since been rescued by the float in the markets, and we are now back above. But that just shows you how close we are to potentially breaking the floodgates and the floodgates opening, okay? In addition, if we take a look here, we can have a secondary trend line that creates essentially a wedge pattern. So you have an upside resistance line here and a downside support. And look at how tight. Now, what does this tell me? When you have a wedge coming to a head, essentially a triangle head, it tells you that at some point, price is going to have to make a decision to either break to the upside or break to the downside. What we also know from wedges is that when the wedge breaks, it's basically being condensed or pressurized. And when that wedge breaks, it's usually a big move in that direction. Is it going to be to the upside or the downside? Time will tell. But I would say by the end of next week, we will have to have broken one way or the other. All right, so that's a key chart there. Quick check-in on the dollar. The dollar remains right on this little resistance line here that goes back to basically 2020. This is, by the way, this was the March 20th high when the stock market bottomed, by the way. That's exactly, what happened. So remember, as the stock market was selling off, people were buying U.S. dollars or global people were buying dollars, so it drove the dollar up. And then once the stock market started to rally, the dollar slowly sold. And then obviously we had this big run up here. But suffice it to say, if we zoom in, we're fractionally above it, but basically on that trend line. This is resistance for now, but we'll watch to see where it goes here in the coming days. This is a key chart, folks. Look at how strong the 10-year yield is. We're almost back to 4.43%. And with CPI coming out Tuesday morning and Wednesday PPI, if inflation is hotter, like Jamie Dimon is thinking it might be, then this could be a bigger surge that takes us up to an upside resistance at 4.55%. But again, this is going to be huge for next week. Don't underestimate the CPI number. The reason why this is so important is because we know the Fed is being pressured to cut rates. We know that CPI last month was okay. It was in line or even a little bit better. But we also know there's been a delay in the tariff implications. And so this is really going to tell us, is there any price pressures in the system that are causing the markets or causing prices to start to go up and inflation to start to creep up? If it does, the markets have not discounted that in the markets, right? So investors are going on the assumption, and that's why markets are at valuations like they are, that everything is perfect, no inflation will ever come, that the economy will stay strong, and that the Fed's going to lower rates anyways, and that these trade issues will all be resolved perfectly, and that earnings will be great. That's what the market is pricing in. And so you run the risk when everything is priced to perfection of one small miss on an estimate or a number like CPI coming in slightly hotter, and then the market saying, holy cow, we have to reprice. And that's where you can get some of these bigger sell-offs. Now, listen, maybe the CPI comes in great. I don't know. I have no idea. I don't have a magic ball that tells me these numbers ahead of time, but just be aware. That's what we want. We just want to be aware. We don't want to have our head in the sand. All right, Bitcoin. We got to talk about Bitcoin. Bitcoin hovering around 118,000 here. It is above this bigger trend line. What I'm watching for now, folks, is if we look here on this longer-term weekly chart from the 2017 high, first high of 2021, second high 2021, first high 2024, is this going to be a second high of 2025 and a reversal back down, or is it going to be the beginning of a breakout and a squeeze? Now, the reason why I'm saying, hey, listen, we're not necessarily broken out yet is because if you look here, there was a couple candles here and here that were above this trend line intra-week. Now, the week for Bitcoin doesn't close till Sunday night. So I'm going to be watching that. And I'm also going to watch for confirmation. I want to see really a confirming breakout before I really say, okay, this can now go to 125, 130, 150 potentially in the near term. All right. So again, keep an eye on this. But again, just be aware that just because intra-week we're above this line, right? Here we were above, and by the end, we came back below. Watch closely. Basically, any close back at or below 116 on the weekly, that would be kind of a holding of the line. If it's above, then at least it closes above, and we watch for confirmation. All right, let's look at a few key stocks here, guys. This is a stock that's catching my eye, Robinhood. Number one, it hit a new all-time high today. Number two, it's backing off, potentially putting in a topping tail. So topping tails are bearish reversal signals. It's still stuck in a beautiful parallel. Look at here, goes right to this high, and then these lows match up perfectly. So again, it's stuck in this parallel, but again, a topping tail is something that I would stand up and pay attention to. Coinbase, I find this interesting. So Bitcoin's having a great run, and Coinbase is down today. Again, Coinbase doesn't trade perfectly with Bitcoin, but it usually does trade somewhat with Bitcoin. So it is interesting to see it under pressure today. In addition, I got to respect a trend line right here that we just kissed at the highs of the day, and we are pulling back on. Palantir. All right, look at this beautiful pattern here, this parallel, low pivot, low pivot, low pivot, high pivot, high pivot, high pivots. And here we have a wide range reversal red candle. That's an engulfing. It engulfs all the way back to this day. All these candles got engulfed. That's very bearish. And now we're inside barring, right? Inside bar, kind of a bear flag. So again, listen, it doesn't mean we can't take out this level, but right now this chart looks to me like it could be on the verge of rolling over. Netflix reports earnings next week. There's obviously institutional money taking profits right now, thinking that maybe these earnings, maybe it's priced too much to perfection. The question is, next week, we'll find out. I think Thursday after the close is when Netflix reports. But this is a nice little $100 sell-off from the highs. Not quite 10%, but it is a nice little pullback when the stock market is remaining at all-time highs. And by the way, I'm seeing more and more of these big names that are starting to show selling pressure. The semis still aren't. If we look at the SMH, yes, the SMH is into a beautiful resistance line, but it's still right at those highs. All right. So there's no guarantees that this is topped, even though it is in resistance, right? And NVIDIA, same kind of deal. Look at this, guys. By the way, nice little pullback off the highs of the day today, but you're getting this right into this parallel here, and we're still right up into that level. Again, nice little pullback. You know, we pull back a little into the end of the day today. We could get a topping tail on NVIDIA. Wouldn't that be something? But another stock to watch here, look at CrowdStrike. 2 down days in a row and big down day. This is, again, reversal engulfing 1, 2, 3, 4, 5. It engulfing 5 total candles of prior day action that was grinding up. That, again, is bearish. Here's your follow through today. More and more Meta, right? Meta, same thing here. Not really as good of engulfing, but still starting to put in a bearish pattern here that is catching my eye. Now, listen, again, I want to be clear. The markets have been in control to the upside, but declining volume trends are there. And declining volume means lack of institutional participation. It means retail is buying, but big money is not. Otherwise, volume would be heavier, right? Common sense. So these type of things combined with a negative divergence starting to accumulate on the charts on the RSI has me very much on alert. I know all week I've kind of been saying this, but I'm going to continue to pound the table because there is something lurking here, guys. Just be aware. At some point, something is lurking and the charts are starting to tell me something's lurking. Be ready, be safe. Of course, I'm always here for you. Now, before we get going, I know you guys want me to go over gold and oil and silver. Silver, by the way, having a great day today. But if we take a look at gold, recapturing again, still our line in the sand, still hasn't confirmed below. If it does, it goes down here. As long as it stays in here, here's your wedge, tighter and tighter until it either breaks out in a big way or breaks down in a big way. So you're getting that kind of that compression like we talked about earlier in the market wrap up on gold. Silver, I was telling you guys this was a bullish chart. Look at the breakout today. It's almost to target already. Here's your upsloping trend line. 39 is my target, as I've said many times in the game plans in the morning. And look at that move up. We're now only, what are we at? We're basically 65 cents away from target. Amazing. We could hit it on Monday. Very likely we could hit this on Monday as a target. Now, listen, doesn't mean it won't go further, but that's your first level of resistance that we need to respect. So that'll be the first level where the bears will try to come out and keep price under wraps and push it back down. Oil today staying within its bearish channel. Again, here's your flagpole upside down. Here's your bearish inside bar parallel. And again, we are up today, but still staying inside of that. So as long as it stays inside of this, the bias overall would be to the negative side or the downside. And then lastly, natural gas here, guys, real quick. Nat gas is just pausing on this line here. This was a support line, pivot point all the way here. Then it finally broke down, retraced back into it, and it's right on that line there. All right, so to finish the weekly wrap up, number one, don't forget to follow us on YouTube, Verified Investing. You get extra content there. We have more shows just like this one that all the other traders are doing as well. Go follow us on YouTube, Verified Investing. You can search that and find us there. The other thing to say is be ready for more volatility. This weekend, at least in the S&P, was very much quiet, right? Last week, we had the pre-holiday sessions. This week, the post-holiday, people are on vacation. There's no major news. For the most part, earnings, no economic news. That's all starting next week. But that means action is coming. And action to me as a swing trader and a day trader, it means opportunity. And I'm going to be here guiding you guys based on charts, no BS, just charts. I'm going to guide you guys through everything the best that I can. You guys have a great, great rest of your day, your weekend. Can't wait to see you on Monday for the game plan.